Good evening, everybody. So that's probably the kind of the issue that we should be starting with. Obviously, there's big money waiting to see who's going to beat who in this election. That's right. Watching news is like being on LSD. So with the announcement, I guess, on Friday that the FBI was pulling back on their investigation of Hillary Clinton, and because the markets are much more comfortable with the status quo versus something new, and I guess they figure Hillary Clinton would be more to the status quo. Big market today. So if you kind of look at what's happening overall right here, oh, I hate when I do that. And pretty much of a trend channel. So should we be prepared for another big day? Well, they're still arguing about who is leading in the polls. And notice, again, I wouldn't, unless they break big above this channel, what we can do is analyze it. We're still in this trend channel. And what's been the nature of this trend channel or this whole trading all summer and then through the fall is very indecisive, up, down, up, down, up, down. So unless they really indicate that there's a big movement breaking out of this area, then we have to kind of assume that until that happens, we're still in the same nature that this market has been portraying now for the last 4 or 8 weeks, and then for the last 3 months prior to that. Just we got to see something different happen, or a change of investor sentiment. So what that tells us about the NASDAQ is there was that inverted hammer on Friday with a gap up. That's usually a good indication there's going to be more upside. But at this point, anytime I see a big signal, I want to see it's confirming the next day before going after. Just too many times where you have a big day and then next day investor sentiment kind of dwindles in the other direction. Crude oil, as you can see, traded back up today. Not a real signal, but the relevancy of this buying right here kind of indicates that this area right here is acting as a support level. And gold, which had been acting strong, but this is why we always want to see what type of investor sentiment or signals we're getting at important technical levels. So as we can see, the gold prices over the last couple of days, big spinning top, a doji, kind of a top right here, a gap down today, back below the 50, back below the T-line, and sitting right here on the 200. If they start trading this lower, now they've opened it up a little bit after hours, but if they start trading lower, what can we assume? We can pretty much assume that this downtrending channel is still in progress. So the relevance of that is things like Nugget backed off pretty hard today. So I've just finished up a video on trend channels, and this is kind of a good illustration right here. We pretty much have a trend channel down here with the top being, oops, it's not, oh, this is working out, yes, nicely. Kind of parallel up here. The stochastic slow or turning over a little bit. So what's this do for us? Well, if we know the simple rules that we could add up, They're probably going to move it in the direction of how they open it tomorrow. If they start trading down, especially through the low, what's that tell us about this trend channel? They're breaching it, so we might be in a situation, or more than likely be in a situation like this, where we have a wave 1, a wave 2 channel, and then going into wave 3. So if we add up everything we know about what happens after a candlestick signal and apply that to what everybody else is watching, like a trend channel, if it opens lower, we can start shorting this one with the prospects that there'll be another downdraft, which would also kind of be a indicated by what gold does tomorrow. The dollar bounced back up. So here's, again, a very simple rule of what you want to do if you're in a trade. Again, we shorted this one right here because with the rationale that indecision, bearish engulfing signal. That told us which way they were taking the decision. Very graphic. Started in a downtrend, and we got down here to a spinning top. Where was our stochastics? Just now getting into the oversold area. So if you're in the oversold area, and notice you moved a little bit away from the T-line, just a very simple safety stop, which will let you sleep well at night. Just put a buy stop just above the high of, what was that, Friday, because if they come up through that level, that tells us pretty much what's happening. There has been a reversal, and more than likely they're going to pop it back up to the T-line area. Let's see. We looked at soybeans today. Still not very, say not very energetic, but there might be a J-hook pattern setting up. And some of the other grains are not trading well, as you can see what's happening here in wheat. However, this is where the visual analysis of what's happening in a trend is very beneficial, especially for the candlestick investor. I mean, this is visually what we can see. Is this, I mean, there's basically a trend channel going on. So there's two elements of a trend channel. One tells us if we see a trend channel going on, more than likely we don't want to be trading it because it's not going anywhere until we get out here somewhere where the trading range gets very small. You want to see whether they're ready to break this way or this way. So it just gives you a prelude to the fact that there's indecision. Now we're waiting to see which way that indecision goes. Now I've been short live cattle for the last few days, all because of the same kind of analysis. I don't know what that is, so we'll get rid of it. But if you just kind of observe the obvious is we're in a downtrend. We get back up to a resistance level, like the 50 or near the 50. We started seeing sell signals. Which was telling us, all right, they got up here, they're up in the overbought condition. We're starting to see sell signals, and a close below the T-line on, when it started trading below the T-line on Friday, we started shorting it with the idea that where's our projected target? Well, the first target is probably right here. Second target, probably in this area. So do we know where it's going to go? Not really. But when it gets to this level, we want to see if there's signals like this start forming. If it breaks through here, then we watch for this area to see what signals start forming. Allison, yes, but you can always make conjectures of why things are moving one way or the other. Jane, I'm sorry. comedians all over the place here. But you got to remember, on any given day, there can be reasons why they're taking the dollar up. And the next day they could take it right down for another reason. So I don't ever listen to the reasons. Usually the reasons come out after the price move. I'm usually looking to see what's actually happening in these things. So again, the benefit of candlesticks is it gives us a feel. I don't know whether this one, yeah, that one's getting pretty close. I don't know whether I can do a, whoops, trend channel. Or got to do this, come down and do this. This is where a trend channel is very effective. Not that it's actually going to hit that target, but if you can draw a line and see there's kind of a parallel line, was this any indication that we were reversing? Not really, other than the fact that our stochastics are in the oversold area. We started seeing indecisive bullish candles. And if you can add the fact that we're at the bottom of this trend channel, if we were short from up here, this meant we started covering our short position just because the probabilities are telling us the buying might come back or start back in here. So I would rather get out here or get in here, get out here, and go on to something else just in case something like that happens. Kind of a rounding bottom, yes, but you've got the rounding bottom. You've got the Morningstar signal here. They opened it lower and took it right back up. If you cut the chart off right there, make this big enough where we can see it. What's that tell you? Morningstar signal says there's buying going on. Next day they opened it lower, took it down, and then by the end of the day brought it back up here. What's that tell us? There's buying going on. So why would you want to be in a short position with stochastics in the oversold area? You can see a candlestick buy signal and continued buying. Just tell you the probabilities are now going against you. Same scenario on Weibo. Whoops. We had been short on this one. And then we had the doji and then bullish confirmation. We were starting to cover our short position because we were down here and we were starting to see buy signals. So if you go to the very simplest explanation or analysis of candlesticks is that if you start seeing buy signals in the oversold area, the Japanese rice traders say logically that's probably where a buy reversal is occurring. So if you're short and you're seeing a situation where the probabilities are the buy signal is occurring, close it out and move on to something that has better probabilities. So the same scenario occurred today on SPWR. Bullish Harami told us if they opened it positive, we should be out of that trade. So we closed out the position. Now, does that mean that we're out of all short positions? Definitely not. We can see we're in a downtrend on light. It opened, traded positive. But the big thing that was happening was it was trading right about where it opened. And obviously the market was up huge and it wasn't going anywhere after it opened. So finally it traded back off. Do we believe if the markets pick a direction for any length of time? That's the whole purpose of candlestick analysis, is not what we anticipate, but if we see candlestick buy signals, we usually see a buy signal reversal. Yeah, we're going to see an uptrend. However, we also have to analyze what the nature of the market is. Over here, we saw a very strong price move. We saw a J-hook. We had a strong price move. But ever since right here, notice the direction of the market, pretty much sideways. Gap down one day. What was the direction of the market since then? Pretty much sideways. So even though we've seen some very strong buy signals during this sideways market, we're not getting any confirmation. We've seen some pretty strong sell signals, but we don't get any confirmation. Today we're seeing a pretty strong buy signal. Now we have to see whether there's confirmation. Why are we waiting instead of saying, yeah, this is a strong buy signal, we should be ready to buy? Because the nature of the market up until this point has told us that there is no consistent price moves. There will be price moves that we can analyze and get good strong trends or downtrends. That's the whole purpose of seeing what's going on in investor sentiment. But at the same time, we've got the benefit of seeing what is happening in investor sentiment. Not only could you look at this chart without a candlestick chart and see that we're moving sideways, but the fact that we see up days, down days, all in this range tells us there's really no conviction one way or the other. So that was a long answer, M&M, to say, yes, we can usually pick out situations that tell us where we have a strong price move, but we also have the capabilities of seeing when the market is telling us there isn't going to be any, or there isn't any strong price moves. EXAS was another one that we were short because of the big slam kind of through this support level. But notice what was happening down here. We were in the oversold area. And we had 1, 2, 3, 4, 5, 6 indecisive trading days. After about the second or third day where it wasn't trading off lower, we started closing our short positions. Why? Because we were starting to see buying. Look how far away we are from the T-line. One of the elements that we always look for to see how far away we are from the T-line. If we start seeing potential buy signals, where do you think our first target is going to be? Right back up to the T-line. Well, in this case, it went sideways for a while. So all we're doing visually is analyzing where we are in the trend, what type of signals are we seeing, and when are the probabilities starting to tell us, nah, we better start closing out positions. Same scenario on Newlink. Newlink was just a perfect trade setup. I mean, you can find charts that just are excellent to trade. Look at our fry pan bottom. Look at our breakout. When we broke out through the 50, and which was correlated with where the fry pan bottom started, where do you think our next target was? Probably up to the next major moving average, the 200. Bounced up, tried to do a bobble. What happened on the second attempt? Well, there's our bearish Harami, right smack dab at the resistance level. Following the bearish Harami was a bearish doji sandwich that closed below the T-line. And what do we know about a bearish doji sandwich? There's probably going to be more downside. How long do you hold on to a downtrend? How many days do you go back for trend lines? Just whatever you can find that tells you there's some sort of tops. Yeah, it all depends on how big or small you want to make your chart. I'll find some more, Don. But anyways, so how long do you stay short? Until you see a buy signal and a close above the T-line, with the caveat that the further away you move from the T-line, the higher the probability you're heading back up. So what do we want to see, or what don't we want to see if we're short? You don't want to see a potential reversal signal, bullish Harami, that far away from the T-line. What did that tell us where we should put our stop? Well, yeah, safety stop was right here at the high of that bullish Harami. That if it started trading positive from there, where do you think the first target was going to be? Well, at least back up to the T-line. So if we were in short in this area or this area, that's a decent profit. We're not trying to maximize our profits by getting in at the absolute bottom and getting out at the absolute top. There's no way to do that. What we're trying to do is find the trades that get us in with an extremely high probability and get us out when it's time to get out. Hecla is still a good chart because we're long. And notice what it can't do. They can't close this below the T-line. They're basically using the T-line as support. Now, today was a big day, so should you have been buying everything? Well, it went up 300 points in a matter of 10 minutes. So how do you decide whether you're buying something because it's got the enthusiasm of a big market or whether you should be buying it based on its own merits? Well, that's why we recommended GIMO, because if GIMO opened positive, we could see the J-hook pattern occurring right smack dab off the T-line. And what was our signal? It really told us there's been a strong reversal. Well, there's our kicker signal, right smack dab off the 50. So if it opened positive today, whether the market was up 10 points or 300 points, it told us we wanted to start buying because the J-hook pattern was in progress. Let's say when trading the 2X or 3X ETFs, do you analyze the ETF or the underlying entity? Nugget versus gold. Well, obviously, the underlying entity, in this case, gold itself, is probably what's going to move the stock. Is GDX the and it won't matter because they're all going to look the same. It's the risk reward that you want to go after. So if you're more conservative, you just buy the ETF itself. If you want to play it out a little bit more aggressively, you go after the 3 leveraged one because, very simply stated, all the charts are going to look exactly the same. So I know that the gold charts are all going to look the same, whether you're buying the GDX 3 leveraged nugget. Well, if they're going to look the same, I might as well go after the one that has the leverage on the basis that every candlestick signal that I look at or pattern I look at has probabilities of moving in the direction that I expected them to be moving. So I might as well get as much leverage as I possibly can. So you even leverage this even further by saying, all right, if I think they're breaking this down and have a good strong percentage move, I'll even leverage a little bit more. I may buy the puts. So it all depends on your risk reward. Oh man, what happened? I just hit the wrong button. All depends on your own risk reward, whether you want to trade the leveraged or the non-leveraged. Now, the leveraged and the non-leveraged are all going to act the same based upon what the investor sentiment is in that whole industry. One just happens to be a little bit more volatile. Did I do GIMO? I did GIMO. So on things that were already moving, like our recommendation on BGFV was based upon the Morningstar signal and the doji sandwich, or basically your McMuffin, that if broke out through there, there was another doji sandwich type setup. So we just want to stay long, and today just happened to help that that movement. Same thing with AKS, J-hook type pattern. It's getting to the top of this channel. What channel and trend? Yep. Oops, I could have drawn that a little bit better. So does this mean anything? Definitely. If it starts trading up here and looks like it's stalling out, I'm going to be a little bit more diligent as far as watching what type of signal occurs at that level. Because that's the top of that channel. All right, and so here's another way to kind of watch what your pattern setups are going to look like or should be looking like. This is looking like a nice signal. It's bounced off the 50. This is Western Digital. Now we've got your best friend signal. But what else can we kind of imply that's going on here? I think I got this. Yeah, you might have this type of wedge setup going on. So if we can kind of see that, we know it's going to resist here. Definitely not, but we'll at least watch to see when it gets here what it does. If it fails here, we kind of can guess that it's going to be in this wedge. We want to be back out of it because it's not going to do anything until they break it out to the upside or the downside. So this is another illustration of the visuals of candlesticks tell us what's happening at support and resistance, advantage of what all the other patterns are there, whether it's a trend channel, a wedge, heads and shoulders, whatever you want to be looking at. We have a much better view of what's going on based upon each candlestick signal. So our recommendation last week on Square, we're now getting up in the overbought condition, and we did a shooting star doji. So is that any warning? Definitely, for two reasons. We're getting up here in the overbought area, and look where it kind of topped out today, right about in the same area it topped out before. That makes it very simple. If they open this lower tomorrow, we're going to take profits with the anticipation they're coming down. Oops, I didn't want to do that. Coming down to test the T-line. We want to take profits and see if it's doing it, see what it does from that point. We recommended LXU because of the big bullish engulfing signal on Friday. Again, a simple analysis of the bigger the signal, the more compelling there's been a change of investor sentiment. Now we've got the next criteria. Doji today. What's this kind of setting up for? Well, if this is big candle and a doji, if it opens positive, we know it's going to move positive with the potential of moving with this type of magnitude. This means they could pop it right back up to the 50. So even on a day trade basis, you could be jumping in on a positive trading and see what it does up here and take profits immediately during the same day. Did I do NVIDIA? Yeah, the best friend signal. Okay, so there's some others out there. Oh, there was a reason I had this. Oh, look where you are. Big fry pan bottom, right smack dab, back to the 200. And what are all the elements that we can put into this analysis? Well, this uptrend to the resistance level came off a left-right combo belt hold type signal. And right here, we got the bobble. And if they open this positive, what's that telling us? Not only do we have a bobble breakout, but we probably have a fry pan bottom breakout. That tells us our upside could be pretty big. Does crazy election negate all of our analysis and we should not trade until it's over or it's done? Jason, you don't disregard the chart patterns. Now something on this, like this chart pattern where I know there's something very slow and progressive, like a fry pan bottom, that is probably not being affected by the election itself, that I'd be apt to buy. Or like in GIMO today, even though we were this close to the election, this one could be bought because we could see if it opened positive, we had probably a fry or a J-hook pattern looking for this breakout. So if I'm getting into a situation where there could be a big volatility factor as far as the overall market, I'm still going to stick with the patterns because they're more apt to disregard what's going on in the overall market. Why would you not look for more upward overall trends to have better odds like CC? Because if I've got 10 positions on, I might have 6 or 7 positions that look just like this, where all I have to do is hold them as long as it stays above the T-line. If I'm adding positions right now in this market, I want to find things that are showing me very strong signals, like Lionsgate. There's your bullish flutter kicker breakout, big scoop type pattern. That tells me there's probably a lot more upside to this one. So I'm looking for things that have the probabilities. Now, when I buy something, I mean, we could wake up tomorrow because, I can't even think of another announcement that could be coming out, but it might swing the market down 250 points. Is that feasible? Well, there's been times where they've knocked the market down huge. The next day they took it up huge. Next day they took it down huge. A couple of days later they took it up huge. So right now with these market conditions, I'm not going to be sitting thinking, all right, this is in a trend. I want to be very diligent as far as what all those positions are doing. Did I do that right? LGF, Lionsgate. I recognize the name because I mentioned in the chat room this morning, I went to see Hacksaw Ridge, I think it was last night, and saw that it was Lionsgate that did it. That's a intense movie, geez. Yeah, I'm down. Well, yeah, I had one big position. I had a couple small positions, which were the shorts, and I had one put position on, which was light. So I'm probably less than. And I covered a couple of the short positions today, so I'm probably less than 20% invested at this point. Am I worried about missed opportunities over the next few days? Definitely not, because if you can't analyze what might be happening because of all the variables out there, I can wait a couple of days, and when all the indecision or when all the information is now out there, now I can see what everybody's decision was based upon what the candlestick charts are telling me. You ever take implied volatility into consideration when trading options? No. What one were we looking at? Let me finish this one. Veil, that's a good J-hook pattern. Going to kind of see the fry pan bottom J-hook pattern. So that one I wouldn't be afraid to be buying. So Mario, back to your question. No, if I was buying, whoops. If I was buying this one, buying calls, I can pretty much assume that the implied volatility is not very big, since this has been a very slow moving trade for the last, whatever, 1, 2, 3, 4 months, 3.5 months. So there's not going to be a whole lot of implied volatility there. What I'm looking for is what we know about candlestick charts, is if this breaks out, there could be a very strong move, which had absolutely nothing to do with the implied volatility that it was trading prior to that. So we're not trading what everybody else likes to trade. Pattern breakouts happen in overbought conditions? Usually, yes. Essentially, we're buying the signals when they're in the oversold area. We're buying pattern breakouts, usually when they're happening in the overbought condition. So there's a FTI, which is another J-hook pattern setting up. FDC, there's a kicker type signal. That's also setting up for positive trading. If it opens positive tomorrow, where is it moving to? It's breaking out into new territory after a kicker signal. Oh, pshaw. Do you have a range of stock prices that you particularly like? Not necessarily. Mainly because we can scan the best trades We can scan through 10,000 charts and find the best trades the next day within the matter of, if you know what you're looking for, 5 minutes. If you don't know what you're looking for, maybe in 20 minutes. But I don't try to limit myself to what price range, because the best trade might be a $4 stock tomorrow, or might be a $340 stock tomorrow. So, no, I don't limit. Now, if I'm trading options, I'm usually going to go after the options where they're the higher price stocks. If I've got a $6 stock that looks great, I'll probably buy the stock because I eliminate the bid-ask spread concern as well as the time factor. If it's a $74 stock, I'm more than likely going to just buy the options. Surprising that Labu strong with anticipation of Hillary. Should it be the other way around? Sean, I don't try to figure that out. I'm not smart enough to figure out why biotechs went up if it looked like Hillary is coming back. Yes, so I don't know the reasons. There's always a change of investors' philosophy as time goes on. So you look for stocks with, usually my minimum criteria is that I want to see at least a 10% price move. And that the reason for that is, on a day like today, where we had tons of these type of charts, I mean tons of them. So I can pretty much, if I'm looking at a stock situation where the next price move may be up 8%, or the next price move may be up 24%, obviously I'm going to go after the ones that have the 24%. So I'm usually looking for kind of cultivating out my trades by which ones have at least a 10% upside potential. So anyways, Labu, why the biotechs were an idea. Don't know what the rationale is for that. But I don't have to figure out the rationale for that. All I know is the biotechs are up strong today for whatever reasons. So a little biotech like this, CRBP, nice little morning star or a doji gap up in the oversold area. Is this something worthwhile? Well, I'm going to watch. If it opens positive, and it looks like they've started the uptrend, what's my upside potential? Well, if they brought it back up into this area, that tells me I've got almost 100% upside potential. If they bring it back up just up to here, I've got about a 28% upside potential. So at least I know which ones to go after. Because if I'm looking at something like this, 3M, and I'm just happening to pick out any institutional stock, if this looks like it's ready to bounce all the way back up to the 50, well, that's going to be a whopping 1.5%. I may not want to spend my time and energy or my risk allocation to something that doesn't have a very big price move to it. So part of the scanning technique is not only finding which charts look the best, but which charts have the best upside potential that if it does move, you're going to make good money on that trade. Mario, that could be true. So, but because we don't know whether it's a reversal or a whether with a short covering, things like this that we were making very good money on the short side. We saw a Morningstar signal on Friday. Very simple conclusion that if it opened positive today, we close out the position. Well, we closed out the position, but then look where it closed. Back below the T-line. Does that mean what do we want to do? Well, if it started trading back below the halfway point of the signal that told us the bulls were in control, you can always go short again. So that covering right here was just the insurance that I wasn't watching something that was heading back up to this level or even higher. We don't know whether today was short covering, Jackie, because there wasn't, if you look at the overall market, it wasn't like it was getting really devastated. It's still right in the trading range. So it's not like we saw something like that where there was severe selling and then severe buying. Today was just kind of a reaction to the news, the Hillary Clinton news. So something like Watt, the kicker type gap up. I'm looking for things that would be strong. So is this something that with the market conditions the way they were, that tell me there's been a reversal? I'd be more apt to watch this and say, all right, I want further confirmation, which would both be the market itself as well as the stock price. Instead of saying, oh, I think there's been a reversal in these stocks, we might see them all open here and trade down here the next day. So you still want to see confirmation. So something like this, we had the message on Friday, told us the profit taking is over. So this is something more compelling to look at. But if it started trading up through here, it'd be trading up through this level, putting us into wave 3. So I'm still going to kind of look at what my my charts are telling me. But say tomorrow it started opening positive and I happen to buy this, I'm going to be as diligent, or fairly diligent, say I don't want to see it trade back down here because that just tells me the market was just kind of whipping around a little bit, and, back in its same mode that it's been in all summer, which was big up days followed by big down days. Okay, a few more on the short side. We can see what happened here on YRD, left or bullish engulfing after a hammer right off the 50, broke this downtrending channel with a gap up. You can be buying this one with the anticipation that it's coming up in this direction. So we also know if we're buying on positive trading tomorrow, what's our stop? We don't want to see it close back below the T-line. If it did that, that breaks that uptrending analysis. So we had a lot of stocks over the last few days. Whoops. That had good, strong reversal signals. Now, on something like this with a big belt hold, this is EGLT, that happened on Friday without the benefit of today's big bullish move. That would be something I'd be more apt to look at because there was something reversing in that before the news, today's news hit. Same scenario with our EGN. Big belt hold piercing signal. That's a big reversal signal. That was occurring before the market strength today. IVC had the belt hold a few days ago. Today, it gapped up above the T-line. So this signal was already in well before today's market trading. So I'd be more inclined to go after things that have already shown a buy signal. Fossil was another one where it had a big piercing signal, belt hold type signal on Friday. Today's confirmation, again, might have been the market. It may have been the confirmation anyways from this reversal. So I'm looking for things that are more apt to be confirming what was already created as signals before the buying came in today. Here's another one that we were short. It didn't execute last week. Notice what it did. It closed smack dab on the T-line on Friday. Today it gapped down below the open of Friday and did a big spinning top. Makes this very simple. If this opens lower tomorrow, they've failed here. Got a big dumpling type top. This one you definitely want to be looking at to short again, or look at again for a short if it opens weaker tomorrow. And so I know some people had been short CLCD. There was that break, lots of indecisive trading, almost kind of a little wedge formation, and then it closed below the T-line. They haven't been able to get back up above the T-line. However, as we got close to the 50-day moving average, we did a doji. Notice what it did today. It might be supporting here. Let's make this bigger. But it still hasn't gotten back up above the 50. And as far as a strong signal, figure if the market was up 300 some odd points today, 370, probably wanted to see a little bit more strength and something like that to tell you that they've the short positions or the shorts were covering. And we recommended going short on Diamond Offshore. And when we do our entry and exit strategy session here pretty soon, there was your stop. It may have been, I forget what we said, if it came down, probably down through the low of Friday, you could be shorting it, because you can see what type of pattern was setting up, kind of a dumpling top. But with it opening positive after this big selling, very simple entry. If it opens up here and it's trading up here, you put your sell stop just below the close of the previous day, because you can see graphically, or visually, I guess, if it started trading back below that level, that tells me this candle is up, basically turning still red, but the sellers are still there. So you want to stay short on this one. What was this one? FSM. Another one where it's very logical to say that the 50 is acting as resistance. Did a doji. If it opens lower and does our bearish doji sandwich, what's that telling us about our trend, or our trend support level? Kind of this area is being breached. So you can be shorting this one below this level with the anticipation your next target is going to be at least down to the 200-day moving average. And as we saw in the golds, something like this, once again, is there any logical selling right here? Well, we had an island reversal, and pretty much, again, if you draw your line right through kind of the tops here, that's where the resistance level is. Where's your next support level? Probably down in this area. So anyways, back to the market in general, we don't know what's happening out here. I mean, for all we, what do we want to say? Right this close to the election with the announcements all going on, it could have been on Sunday, Kumi came out and said we did find more evidence, and the market would be trading down here right now. So with all this going on until the election, since that's an unknown, I just kind of sit, and anything that you're going after should have a very compelling chart to it to start trading it. So guess that's about all I got for tonight. Just a reminder for everybody that on December 3rd and December 4th, that weekend, that's when we've rescheduled our 2-day training. So keep that, especially for the new people. That's usually your kind of your bread and butter, full scale learning session. So that's December 3rd and 4th. So with that, are there any general questions on candlesticks? Do we have to re-enter our names? Oh, I don't know what that means, Elsie. We have to re-enter our name. Oh, if you paid for the session, no. If you're already paid, or if you're a member getting a re-session, you might want to just make sure you Yeah, if you've signed up for the previous session, you should be on the list for the next session. Bob, that's up to each individual too. Bollinger Bands, to me, are we've had John Bollinger on here a couple times in the past, and he'll be the first to admit that Bollinger Bands just tell you where you are in the trend. What I think is even more effective, which you see here every day, is the T-line. That's probably a lot more informational than the Bollinger Bands. Now, my late friend Dave Elliott of Wall Street Teachers modified the Bollinger Bands and turned them into what he called MOBO bands. And that was a little bit more effective as far as entry and exit strategies. But Bollinger Bands just kind of give you a indication of whether you've moved too far away from the normal trading range. But more explicit for that illustration is the T-line itself. Okay, I guess, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. Kara, stay long. Doesn't have a reversal signal, but obviously bouncing off the 50, which means if you're long, you just be a little bit more diligent as far as watching for the first sell signals. XIV, gap up. The same scenario with these big gap ups. Just be careful of what the whipsaw action. Want to make sure they're confirming. Yen. Yen's still a toughie to trade. That one would be a tough one to trade because of the volatility, or not the volatility, but the lack of direction. Verizon, I would stay, if you're short, I would have covered the short today, but I definitely would not be going long until you see it close back up above the T-line. And AT&T, this one I wouldn't be long or short right now. The short was based on drops, trade sideways, drops, trade sideways. So once I started seeing that it was trading sideways, I would have covered a short position. Two things can happen. You can reshort it if it breaks down through this level, or you can start buying. But again, AT&T is kind of your ultimate institutional trader. It doesn't usually get very much volatility. Bank of America, you can stay long on this one. Another one that's not real exciting to trade, but it's got a decent looking uptrend right now. ACA starting to come back up. You can see kind of a trend channel in here. If you're long, you stay long on this just as long as it stays above the T-line also. PGNX, same scenario. Looks like it's hit the bottom of a channel. If you're buying this one, just watch to see what it does at the 50. Scoop type pattern on AVGR. That's a good looking chart. I'm going to write that one down. So you've got that big flat handle and then the scoop. Notice where it closed, just above the 50. I'd be a buyer of this and just watch to see what it does here. If it breaks out through there, obviously your slingshot effect's in effect. This one you can buy also. Anticipating the volume is decent on this one. This one has broken the downtrend. It did the buy signal on Friday, confirming today. So I wouldn't be afraid to be buying this one also. And Netflix, if you're short, Mario, you can see I would have covered the short today. First of all, because of the market, and secondly, because notice what type of pattern you're setting up, the J hook. So right now, the probabilities would probably be against you as far as a short position. BRX, nothing there that would get me excited about being long or short this stock. And BANC. You can start buying this one. Very simple. If you're buying this one on positive trading, use the T-line as your stop. Not anything wildly exciting, but probably heading in the right direction. Waste management is coming back up. Basically, that inverted hammer, gravestone doji gap up, J-hook type pattern. The only disadvantage is that it's not a very, not going to produce a whole lot of profitability for you. BXS, you can stay long on this one. Same scenario. Not a big, big volatility mover. BCO, that one you can be buying on positive trading. If it opened lower tomorrow and I was long, I'd close it out because that would tell me I'm probably in a sideways downward trend channel. SN and SAM, J-hook pattern. Stay with this one. And WAC, same scenario. That's a good looking chart. Amazon had a big day. Whoops. What the heck? How come I can't spell Amazon? Well, big day. That makes it tough. If you were short, obviously when it opened positive today, should have covered. And definitely if you were short with a closing above the T-line, you should have covered. But I don't know whether I'd be ready to go long. I guess if I was going long, your percentage move up to the 50 is what you got to look at. Yeah, the airlines came back up strong. That's why I'd look at SAVE. Notice decisive. I'd be ready to buy this one on positive trading. FedEx broke out nicely today. That one probably has more upside. Deutsche Bank, not anything real exciting to trade. There's just not a whole lot on this chart. ADXS, that one had a good looking chart also, but same scenario. Where's the resistance level? Probably right here, which would correspond with that downtrending channel. Tazar, nothing. Nothing there to tell you to be long or short. I'd be someplace else. NVIDIA we did, which is a, you can be buying this one just on the steady eddy uptrend. CVRR. Nothing here either. If you're short, you can stay short. Wouldn't be doing anything else other than that. This ASM, let's see. That's a toughie. It looks like it's not big volume. If you like it, you just stay long with it being above the T line. And AXU, if it another one that's, yeah, that's a bad one too. I'd be closing this one out just because there's really no great movement to it. LMAT. Let me go back to LMAT, J-hook pattern. If you happen to stay long, you stay long. I'd be more apt to be ready to pay $22.50 for this, knowing that it broke out to the upside. What was this one? Part of we're going to be doing sessions pretty soon on, and it might be another full weekend session on eliminating your emotions using candlesticks. So I am anticipating, Gerald, that you own this and you're wondering what to do with it based upon that you're hoping that it's still going up. So this is where part of the emotional aspects of it, where how do you get past the emotions of, do I stay long or what do I do with this? We just have to take a step back and say, what is this chart telling me? Is there a strength here? And that's what a process we're going to go through to say, all right, maybe I shouldn't be in here, and or I shouldn't be in here right now. I can always come back later. FNSR, that one still needs to kind of break this downtrending channel. So if I was buying this one, I'd put a buy stop just above today's high. If it comes up through that level, that tells me they're still moving away from the T-line and breaking out into new territory. HOS, bullish engulfing, spinning top at the bottom of a downtrend. I'd be ready to buy this, but not until it starts coming up through the T-line area. Yeah, you can. Well, you don't need to really draw a line. You can pretty much see what the resistance level is, which is the 50. But you do have a couple inverted hammer signals, gravestone dojis. You can buy this on positive trading tomorrow. Just don't let it close back below the T-line with the anticipation that today was the confirmation. Then you just watch to see what it does at the specific resistance levels. EMUS, good looking chart. Inverted hammer, bullish confirmation, not very decisive. So if I was going to be a buyer of this one, I'd probably put my buy stop just above today's high at the $51 area. Yum, I guess, is that a stock split? Don't know what to tell you on that one. Oh, that wasn't a stock split. I think they spun something off, didn't they? So right now, I probably can't tell you what to do with that one. TX, just stay long as it stays above the T line. Devon, stay long on this one. Just watch to see what it does at the 50 also. But the big bullish engulfing signal, this was moving in the right direction prior to the today's trading. CF, nothing there. You can see which direction this is going, sideways. So nothing to give you any real great strength one way or the other. American, not that I can see. No, is that a trick question, WD? I would stay long on American as long as it stays above the T line. Advanced Micro. Right now, if you're a buyer, you definitely have to see it get up through this level, but you can see what the trajectory is. There's nothing real exciting going on in this one. So you've got to kind of assume that this kicker type signal today was based on the market, not necessarily the stock itself. FEYE, there was your message. That told you the message was good. You're right here at the 50. If you're long, you stay long. If it opens lower tomorrow and starts trading down, you close it out and put your buy stop right back up here. If you're ready to go long, if it opens up above the 50 and starts trading positive, you can start buying it at that point. So these are the type that you kind of have to be concerned about. Is the big pops up, is that because of today's trading? Again, the biotech's got a lot of interest. It had a nice buy signal. So you can get ready to buy this one on strength. Right now I'd be cautious about jumping into anything with any great exuberance. A blue ice failure could be, but it doesn't do you any good. If it opens lower tomorrow and you own the stock, you shouldn't be in it. I doubt if you can short it. Weatherford still can't get out of its own way, but this is a scenario that if you were short because of this perfect place to be shorting it, right in here, I would start getting ready to, if I was short this stock, it's not showing any real great strength, but I'd put a buy stop just above today's high, that if it came up through there, more than likely they're bouncing it back up to the T-line area. But it's kind of showing you that it needs to continue lower if you're short. Rig, nothing. That's just a crummy looking chart. and got a little scoop type pattern on PTCT. Still wouldn't be a buyer though until you see a definite close above the T line. U.S. Steel, stay long, yes. Now, look where it closed today. Look where the high was. Not that you're in the overbought area, but if they open this lower tomorrow, that pretty much tells you there's some sogginess here. I might close it out and wait to see what it does once it does get up. I'd want to see it get through that level pretty quick. Okay, guess that's about it. Just be careful. For all we know, tomorrow the pre-market futures could be down 125. So, and not that this isn't a good reversal signal in the markets, but we've had good reversal signal in the markets, and this is what the criteria has been, or the conditions have been. Very indecisive sideways. So we need to see something new to tell us there's been a change of investor sentiment. Okay, with that, everybody have a good evening. We will see you bright and early in the morning. We'll see you then.